It's funny. Everyone's a little on edge these days, right? With the
Yeah.
economy and everything, and
Yeah.
it's makes you think about the future.
Yeah.
So you reached out wanting to learn more about annuities,
Right.
and specifically for retirement income,
Mm-hmm.
which tells me you're already thinking ahead. So kudos to you for that.
Absolutely.
But you're also smart enough to know that not all financial products are created equal,
Right.
especially when things get rocky. So
Exactly.
that's what we're diving into today, folks. Annuities and whether they can truly provide that safety net that a
Right.
lot of us are looking for,
Yeah. Yeah.
especially as we get closer to retirement.
Uh-huh.
We'll be looking at some insights from diversified insurance brokers.
Great source.
Yeah, they really break down these different types of annuities and how they work.
Yeah, and I think one of the most important things to remember is that, an annuity is not a one-size-fits-all product.
Absolutely.
There are different types, and understanding those types is key to assessing that safety factor that you're looking for.
Exactly.
Yeah.
So let's start with the basics. The fixed annuities.
Sure.
I mean, these sound about as safe as storing cash under your mattress, maybe even safer.
Yeah, they're definitely, on the safer end of the spectrum.
Right.
You can think of them like a super safe bond,
Mm-hmm.
The interest rate is locked in, so you know exactly what you're going to get, and your payments are completely predictable.
So unlike stocks, my money isn't tied to how the market is performing.
Exactly. It's not directly tied to those market whims,
Yeah.
It's a contract with the insurance company, and they are obligated to make those payments regardless of how their investments are doing.
So even if the market tanks, I'm still getting my money.
You got it.
Okay, so that sounds almost too good to be true. What's the catch?
Well, as with anything in life, there's always a trade-off.
Right.
And the trade-off here is that the returns might be lower compared to if you were, investing in riskier assets.
Okay.
So you're getting that peace of mind, but you might not see the same growth potential as you would with, say, stocks.
Right. It's about finding the right balance
Exactly.
between risk and reward.
Exactly.
Okay, so we've talked about fixed annuities. Now, what about these fixed indexed annuities
Yeah.
that the source material mentioned?
Right.
Are those like a happy medium or?
They can be, yeah. FIAs, as they're called, are really interesting because they kind of bridge the gap between fixed and variable annuities.
Okay.
So you have the potential to earn more than a standard fixed annuity because the returns are linked to a specific market index.
Like the S&P 500?
Exactly. The S&P 500 is a common one.
Okay.
But you still have that downside protection because there's a guaranteed minimum interest rate.
Okay, so even if the market crashes, I'm not losing my principal.
That's right. You're not going to lose your initial investment.
Okay. But I might not capture all of the gains if the market is doing really well.
That's the trade-off, right? You're not going to get the full upside potential of the market like you would if you were directly invested in stocks.
Right. It's like a safety net with some potential for growth.
Exactly.
Okay, now let's talk about the more adventurous option here, the variable annuities.
All right.
These seem to be where things can get a little bit more, volatile.
Yeah, that's true. Variable annuities are much more directly tied to market performance.
Okay, how so?
Well, instead of a fixed interest rate, your money is actually invested in sub-accounts that are kind of like mutual funds. And you have a choice you can pick from a range of investment options based on your, risk appetite, how much risk you're comfortable with,
Right.
and your goals.
So you have more control over where your money is invested,
You do.
but you also shoulder more of the risk if the market doesn't perform well.
Exactly. It's a higher risk, higher potential reward scenario.
Okay, and the source material also mentioned these things called riders.
Right.
What are those exactly?
So riders are like optional add-ons to the annuity contract,
Okay.
and they provide additional benefits or guarantees. For example, you could get a rider that guarantees you a certain level of lifetime income.
Regardless of what the market's doing.
Exactly. No matter what happens in the market, you're still going to get that income.
Okay.
Or you could get a death benefit rider, which ensures that your beneficiaries receive a specific payout if something happens to you.
Right.
So these riders can provide a really valuable safety net,
Mm-hmm.
but of course they come at an additional cost.
Right. So you're paying for that extra peace of mind.
Exactly.
Okay. So it's all about customizing the annuity to really fit what you're looking for.
That's right.
Okay, so this is all great information about the annuities themselves,
Mm-hmm.
but how do I know that the insurance company I'm working with is, legitimate?
That's a really important question.
Right.
And thankfully, the insurance industry is heavily regulated at the state level.
Okay.
There are a lot of regulations in place to make sure that insurance companies are financially sound and able to meet their obligations to their policyholders.
But what happens if an insurance company does go bankrupt?
Right.
Are there any safeguards in place for my investment?
Yeah, so it's not exactly like the FDIC insurance you have with banks,
Right.
but most states have what are called guarantee associations.
Right.
And these associations step in to protect policyholders up to a certain limit if an insurance company fails.
Okay, so there is some protection there.
Yes, it's not a perfect system, but it does offer some level of reassurance.
That's good to know. So it sounds like annuities offer a range of options,
They do.
from very safe and predictable to more growth-oriented.
Mm-hmm.
And it really comes down to individual needs and risk tolerance.
Exactly. And the source material we looked at really hammered home that point, that finding the right annuity is a personal decision.
Right.
It should be based on your specific financial goals and how comfortable you are with risk.
Yeah, there's no one-size-fits-all solution here.
Absolutely not.
So for someone listening who is intrigued by annuities but maybe unsure of where to start,
Mm-hmm.
what would you recommend?
You know, I always say working with a qualified financial advisor is the best way to go.
Okay.
They can look at your individual circumstances, help you define your financial goals, and then guide you towards the annuity product, if any, that really aligns with your needs.
Right.
They can also help you navigate all the complexities of these riders and all the other options that we talked about to make sure you're making informed decisions.
That makes a lot of sense because it can be overwhelming
It can be.
to try to figure all of this out on your own.
Absolutely. And, everyone's situation is unique.
Right.
So having that expert guidance can be invaluable.
I think that's a great place to leave it.
Yeah.
Lots to think about, folks. Annuities can be a valuable tool, but it's important to do your research.
Yes.
And as you said, seek out expert advice
Absolutely.
to make sure that you're making the best decision for your unique situation.
Couldn't have said it better myself.
All right, folks, until next time, stay informed and stay ahead of the game.
Sounds good.
We'll see you in the next deep dive.
Take care.
Bye.